So I know we're running late. I'm going to invite my panel up, and we're going to do my panel fast, and we're going to come out with a couple great short pieces of wisdom, and we're going to all have lunch together. So please. General partner, Landmark Ventures. I think the vision for this panel is we really wanted to bridge a little bit in the theme of internet, innovation, customers, and hear a little bit more about some of the enterprise software and cloud specifically to better understand some of the trends. I'm going to try to get us done in 20 to 25 minutes. What do you guys think about that? Can we do it?
Sure.
Short, fast, to the point. So if we're at a Dealmakers conference, as an opening question, I think a really good thing, and thinking of who the audience is and what they want to hear, why don't we talk about where you're spending money? And I think that that's an interesting question. I think for the people in the room that might be investors or startups, I think they better understand, ooh, there we go, that's different. Better understand where you guys are coming from. For the audience, we have 2 investors and 2 CIOs on this panel, so you've got 2 different perspectives. But I think you're still going to be able to get a good answer in both of those. And so, Sigal, if you could introduce yourself briefly and maybe answer that question, where are you guys spending money today?
Hi, Sigal Zarmi. I'm with GE Capital Americas. I'm in Stamford, Connecticut. And mainly what we do at Capital Americas is investing in mid-market companies. We're doing leases and loans. We have about $11 billion in revenue and over $2 billion in net income in 2011. And in IT, where we invest in technology, is mainly around leveraging cloud technologies to connect our customers to us and to each other. And we've had quite a few successful projects that Beth Comstock talked about earlier around social enterprise. And we looked at it differently in financial services, where we are trying to connect our customers to each other and to experts across GE. Because GE has so many experts in different sectors and industries, we wanted to provide different value proposition than just being bankers and financing to our customers. So we are able to bring them expertise in energy consumptions, in transportation, in human resources, in financials, supply chain management, and able to bring our customers different know-how and knowledge to make them being more efficient and retain them better, because we're able to provide more than just money to our customers. So that's how we use technology. We're investing a lot of money in that area now.
Okay. I want to come back to you, but we'll go down the line. So Ronen, you're a local investor here. Same question. Where are you investing and spending money?
So we at Carmel Ventures, we've been investing in the ICT space, in the general ICT space since the beginning, since our first fund in the year 2000. And interestingly, I don't think that we have changed a lot the way that we allocate money in the last 2 funds, which is basically the last 4 or 5 years that we've been investing. So we invest again for this panel, we still invest about 25% to 30% of our money in companies in enterprise software. Now, is that the same enterprise software that we used to invest 7 or 8 years ago? Absolutely not. And again, it comes down not to whether we invest in enterprise or not, but what is the definition of enterprise software. So if we are talking about, if in the old days we talked about client-server application that will go in a perpetual licensing model into the CIO of the enterprise, do we invest in those anymore? Not being judgmental, just empirical, the answer is no. Do we still have companies in our portfolio that are doing well on this? Absolutely yes. I don't think that we will continue to do much investment in that area. Do we invest in companies that sell to enterprises? Absolutely. So I think that, and maybe we'll get to that later on, what is the definition of the new enterprise? But I think that in terms of the overall selling to enterprises, whether it's directly to the departments in the enterprise, whether it's to the IT organization, whether it's in both infrastructure, middle layer, or applications, absolutely, we do this, we've done so, and I think that looking forward, we will continue spending about the same amount of money in our future investments as well.
That's great. Steve, similar question for you. So you're the CIO of the New York Stock Exchange. You guys see money flow through your network, you spend money, you manage it. What are you doing now in terms of innovation at the stock exchange? Where do you guys see gaps? Where are you guys spending money to evolve and innovate?
Well, the important thing is we're trying not to spend money. We're trying to spend less and less every year. because we're in a commodity-like business, and if you're in a commodity-like business, operating costs, you want them to be as low as possible. And yet our transaction volumes grow all the time. So we have big data issues like everyone else has. We have network issues in terms of growth. So we're trying to find efficient ways to manage all that, make it cheaper all the time, and yet support the growth. So it's a big, big challenge in terms of the volumes of data and the speed with which the data flows through the system. So we look to large companies, small companies, anybody has good ideas to help us on that. On the other side, as some of you may know, we sell a lot of our technology to external firms, typically customers of ours, to help them with the same problems that we have, and we figure that we've been doing them for a long time. We do them at a scale that very few other people do, and we do them at a good cost structure. So we go to our customers and we say to them, we can manage your infrastructure for you, we have software we can sell to you, we can run for you, and we can run the kinds of things that you, our customers, do. We can do it better if we do it for you. Because we have the expertise, and so we invest in that side of the house to make our technology portion stronger, at the same time trying to reduce our operating expenses. And again, I threw out the big data term, cloud. We also operate our own private cloud that supports the capital markets industry. We think it's a great feature for our customers, and I want to mention at the very least we're very involved in here in Israel in IGT, which is a consortium of companies to support big thinking in cloud and other and related technologies, and so that's where we're putting our efforts.
Good. David, before I come to you, I want to go back to Sigal for a follow-up question. So as we think a little bit about what Steve said in kind of, adoption of cloud technology, et cetera, where do you guys see the major gaps? And so you as Steve, obviously, as the operators, the holders of the budget, so to speak, David and Ronen as the investors looking to find those innovative companies that maybe you guys use. Where would, what advice would you offer for startups? Where do you see gaps? Where do you see big companies successful? Where do you think, smaller, maybe even Israeli companies can be successful?
From a financial services perspective, the biggest gap that we see with the cloud is security. And that's why, the stock exchange, we have our own private cloud. I think the biggest thing for startups is to figure out security that can be attached to specific software, if it's enterprise or not. We see a lot of great software companies, small companies, startup companies that provide specific products that you can take them, combine them with other different software products and orchestrate and architect a whole solution just by combining different softwares together. And if there is a security solution that can overlap different platforms, different technologies, and provide a service that is secure, that's a huge win right now. We don't see that in the market, specifically for financial services. So we are going to private cloud, but that will be, I think, great innovation for companies. And specifically in Israel, where there is so much expertise in security, cybersecurity was talked about earlier, fraud, penetration, and so on.
Great. So, David, let me come to you. We had a half conversation last night at dinner, and we were talking about something Ronen mentioned, kind of the new enterprise, evolving enterprise, some of the major trends, and as an investor, what that may mean for you. Do you want to share with us Blumberg Capital's vision on where do you think kind of enterprise software is going, cloud 2.0, 3.0, X.0 perhaps?
Sure, and I'll keep it on the same theme to be parallel, but where we're investing. We're at the very early stage of the investment cycle, and so we specialize in seed and A rounds, but unlike a lot of seed-focused firms, we're not just local. We're based in San Francisco, but we're extremely active here. We have one of my colleagues, Alon Lifshitz, who lives here, we're doing things in Europe and beyond. So we're quite active because we believe that bright brains are quite widely distributed, while markets might be easily that there's almost a disruption at every level of the service industries. And we heard the presentation from Migdal. Almost every service industry is being disrupted, just as last century almost every manufacturing industry was disrupted by innovation and productivity. So today, since 70% of economies in Europe and the US are service businesses, they're ripe for disruption, and enterprise meets cloud, meets mobile, meets social, means total disruption for many of them. And so we're finding enormous opportunities, big data, things that allow new kinds of marketplaces which are much more efficient than even 10 years ago. The difference between what can be done in terms of cost for an entrepreneur now in terms of reach and capability and the analytic power at very low cost is dramatic. So never been a better time to be an entrepreneur, and we're finding a lot of opportunities that are not necessarily classified anymore in enterprise, but they touch it from many, many angles. So I think the opportunities are still great here, but maybe the naming has changed a bit.
Steve, I'm going to ask you an honest question. Can I get an honest answer back? Fair?
Well, it depends on the question.
We'll try. Lots of startups are trying to solve some of these issues. A small Israeli company knocks on the stock exchange door and says, work with us, pick us, embed us in your infrastructure. What are those genuine obstacles for them to be successful?
I think we heard it in some of the earlier presentations. If there's a solution to a real problem, it's the beginning of the conversation. And then, of course, with a small company, there's always an element of risk, whether it be technical risk, financial risk. But if managed properly, we're very eager to talk to firms like that because we all know that the very largest names in the industry have not solved all the problems, and a lot of the innovation comes from the small companies. So we're happy to engage in conversations where there's a real solution to a problem we have. We apply it appropriately and at the right time. Maybe today is not the right time, maybe 6 months from now when the product's a little bit more mature, we will approach it. But we eagerly look for those kinds of things because innovation comes from all corners. And in our industry and most industries, you can't just sit and wait for things to happen. You have to make them happen, and this is one of the ways that we do it.
I think... I was just going to say, oh yeah, please.
I think it's a question of risk. I think it's hard to get to CIOs of big companies with a small product or a product that doesn't have a lot of penetration in the market and doesn't have big customers. Because one of the first questions we ask is, who is your customers? What's your track record? What have you done, right? But it depends on the risk, because if the product is solving a specific risk, like you said, and it is something that is not going to bring down my network, not going to disturb the organization, then I'm willing to take a risk and try it.
Ronen, so you said something provocative earlier. We're talking about the evolving change of the enterprise software landscape. And so there used to be, whatever it is, big three, big four, large IT companies, and 80% of, CIO budget, give or take, went there. I think that that's gotten to be a longer tail, so to speak, and then the big companies are acquiring some of that long tail. So you make your money investing in the long tail. How much of this resonates? What are you guys seeing in the market, and maybe what have you changed as a result?
Well, that's a very important question. I think maybe divided into two. First, I want to follow up on David's comment first. So I think that the term enterprise software is the wrong term. I think that we are trying to use more and more the word business services. Why? Because enterprises are not enterprises anymore, and David has related to that with the SMB and the long tail, and I think software is not software anymore, it's services. Now, whether it's services that are provided internally through the private cloud of an enterprise or through a public cloud, I think it doesn't matter for the end user at the at their desk or at their mobile or at the mobile device when they work. They would like to open up their mobile device or open up the browser and get the service regardless when it's coming from. So I think that the world is moving from enterprise software into business services, and once we define it over here, I think that it's already kind of half of the answer. Now, whether it is, as for your second question, whether real money, I think I will rephrase the question. I think the real question is whether there's a lot of money can be made from the long tail. The answer here, I think, is more complex. I think that in some areas, the answer is yes. When you target the SMB, which is one of the fastest growing markets, the answer is yes. I think that for most companies, the answer is still no. But, and there is a very big but, I think that if once a company had to decide that we are focusing on the enterprise, which means it's a 9 to 12 month sales cycles in order to generate a $500,000 order that may slip a quarter or two and put the entire company at risk, it's not the case anymore. What we are trying to do a lot with our software as a service companies is we are trying to go mid-market as a penetration phase. It's lower price point, shorter sales cycles, and definitely for an early stage company, a better way to prove whether there is a real demand for the market. So I think it's for a company that is solving a real problem, as you said, it's pretty much easier through the long tail SMB to get into $1 million or $2 million of revenue with several tens of customers that will actually make the case, improve the product. I think it is harder than it sounds to scale from $2 million to $20 million after you have tens of customers. I think the real money still lies with the enterprises, and at a certain point you have to go upstream. I think it's a more of an evolution model, which we are trying to say, sell early to the SMBs, make your product perfect, get some reference account, and then try to go upstream into the large enterprises when the real money is. That's the way to build large companies. We've seen, Salesforce and the stuff doing the same approach. That I think it's a good approach to try to do this thing. I think that the fact that the areas are blurring is actually an opportunity for those companies.
Thank you. That was great. David, I want to come back to you. You had mentioned kind of, the edges. Talk to me a little bit about what you're seeing in that device landscape and what might be the implications of a cell phone in every pocket, which used to make a phone call, now has an internet access, and good things may happen.
Right. Well, we were talking about because the issue of storage has been very exciting lately. We have some investments disrupting storage from the virtualization side, which are very much the big enterprise world, although the new technology is able to use standard component hardware and then really make their value add on the software side, and we're seeing very disruptive things. One of our companies, Nutanix, which is getting a lot of exciting press over in the States, can reduce order of magnitude the cost structure of traditional storage networks, and so we're very bullish on that whole SSD attached server storage rather than NASs and SANs. But back to the side of consumer devices. I heard a very interesting, very smart VC the other day at a panel talking about storage, and he said, hey, there's cloud, and everyone is all excited about cloud, and that's true, and we are too, and I'm sure most of us on this for its opportunities. But on the other hand, there's this equally interesting trend going on from 1 billion smartphones right now to very shortly, in a couple of years, 3 billion smartphones. And with Moore's Law continuing, that there's not the same productivity increase in the bandwidth structure of telecommunications carriers. So that means that probably more compute and more storage has to happen on the local devices. So you're going to see more of that performed over there for the consumer side of the world. The cloud is still going to be very important, especially for enterprises and in certain consumer cases, but I think there's this it's like a barbell structure developing. Immense compute power out in the hands of consumers as well as at the cloud center.
Steve or Sigal, are either of you guys BYOD shops, which stands for Bring Your Own Device? Have you guys looked at it, thought about it?
Well, I can say yes, but only by accident. And that's like in a lot of corporations, and at my feed here I have an iPad. iPads have been creeping into the company in the dozens. People buy them on their credit cards so they don't go through the normal purchasing route. And they say, don't worry, I'll have Apple support them. Then all of a sudden they say, well, you need corporate support. And what do you mean it's not secure? And what do you mean I don't have redundancy? And so we have, in a backward way, supported them. And it's worked out pretty well. We'd like to do it in a more orderly fashion, but iPads are the example for us now.
Sigal, same.
Yeah, iPad started with us as well about 2 years ago. Yeah, and first what we did is just give them email access, and that was it. We didn't really buy iPads to our employees, and also not everybody was able to get email access either. And then we started doing BYOD pilot in the beginning of 2011, which actually tried 3 different software products, one from a startup company in California, and the 2 others were 2 big companies that got into that space. And actually the startup company had a better product, so we are expanding that and implementing that on a full scale. But we are not opening Bring Your Own Device to Macs or any kind of other smartphones for now. It will be just for the iPads for the short term until we see the full scalability and the security that software provides.
And while we're still on you, so we'll do, let's say, 5 minutes. We'll try to wrap ourselves down so we can all head to lunch. Question for you, competitive advantage from technology. And so I know that you guys spend a lot of time thinking about this. What would you either advise to, your global CIO? What are you seeing in yourselves? What would you think of for your peers? How does an organization like GE Capital leverage technology for a competitive advantage?
The biggest thing that we think about is how do we differentiate from our competitors, how do we do it faster, and how do we do it through technology. GE is a technology company. We have a lot going on in many different industries. And in financial services, we want to hook our customers. We want to make sure we provide them services and data in a way that no other company can. So in one of our inventory finance units, for example, what we did is took all the data that we are collecting, and everybody collects tons of data, and you can find so much on the internet. But we had a partner with IBM, I think, talked earlier about big data and analytics. We partnered with IBM, and we developed software that our customers can use. They can download, or they can connect data that brings their data with other competitive data into their environment, and can use the data that we are collecting in order to make them more efficient and more productive. And that means that they are connected to us. It's harder for them to switch financiers, and we provide better value to our customers through technology.
Well, then, based on some of the things that we've kind of discussed today, what's one insight that you guys kind of have, one investment thesis where you guys think, in the next year, 2, 3, if X, Y, and Z occurs, there's going to be a nice big market opportunity. We want to go fund some startups that are going to go chase that.
Mobile.
2 words about that.
I think in general, we can define, mobile is definitely happening for all of us as a consumer. The question is, what are the implications for the enterprise? I think that we can divide this into 2 distinct markets. One is the businesses with their consumers and customers, and how does that come around, and I think it's obviously happening. It's just happening much, much faster than anything else happened. So if 15 years ago, no one had a website, then everyone had a website which was more of a static content, just kind of a promotion, and now it's a full-fledged application for a lot of the enterprises. It took 10 years for the web to become this. It's going to take probably 3 or 4 years for this to becoming mobile, which means that the entire cycle is becoming more hectic. You have to develop, to test, to deploy, and to make money out of mobile for enterprises much faster than you had to do before. That's a fantastic opportunity, and I think it's going to happen fast. The second part of this is what is called B2Es, business to employees. So the employees themselves are, new generation, want to come with their own devices, have to solve all the issues of, how to maintain kind of a unified policy of an IT organization, compliance, security, etc., with the productivity and the willingness of the employees to use this. Again, same thing has to be solved within the next 3 or 4 years with all the buzzwords that were mentioned here. I think that when we combine those 2, mobile enterprise is probably the biggest short-term trend that we are seeing, and we are heavily focused on it.
Mobile enterprise, you guys heard that here first. Steve, put your futurist hat on for us. In the next 3 years, what do you think is going to be the most impactful change in the market that's going to affect either the CIO's role or the stock exchange?
Again, for our market in particular, I'm very encouraged by all the attention for big data, although I would argue that big data has been a big problem for decades. It just didn't have the title big data. But I think
Do me a favor, define big data just in case somebody here doesn't know what it is. Two seconds.
It's really 2 pieces. Big data is the recognition that, and we heard earlier today, that when you have sensors everywhere and you've got an Internet of Things and you've got billions of devices potentially feeding information, you have to transmit it, you have to process it, you have to store it. So the problems become bigger by orders of magnitude than they ever have before. And then, oh, by the way, there's the other part of it. How do you use the data and get the value out of it? And I think that a lot of attention is being paid to that by large companies and lots of startups, and I expect some really interesting applications to come out of that.
And David, we'll close with you. Shameless plug. Pick 2 portfolio companies. Tell us why you think that they're the hottest thing since sliced bread.
In this area? Well, I sort of already mentioned one, Nutanix, N-U-T-A-N-I-X, really disrupting storage. And most of you know that, in the old days, people stored data, words, and then it went to graphics, and now it's gone to video. And the storage is growing exponentially, and so capital, even though the cost of storage is declining because of great developments in hardware, the cost of it for most enterprises is still far too high and increasing. So therefore, that's why it's very disruptive, and combined, say, with the software expertise of somebody like Nutanix and the new hardware of people like Fusion IO and companies of that nature in the SSD side, really big drops in that area. But I want to go into one area that, rather than a plug, in addition to what Ronen said about mobile enterprise, which we agree with. The other side of this problem area of big data is enormous opportunity, and I know you implied that as well. Huge opportunity to find much better ways of doing things. I'll give you one strange example. It's not exactly enterprise, but it relates to finance. Microfinance in places where there are no credit bureaus. How do you do it? It would be tough for GE to do microfinance, probably anyway, but especially in a place where there's no credit bureaus. But using the big data that we find in social networks, the power of a social graph is incredibly robust for verifying whether a person's a good payment risk. So that's just one example, and that's a company called Lendo.
That's great. So with that, allow me to thank my panelists. We were hopefully short and concise. Thank you guys so much, and let's join for lunch.